Welcome to the Women's Money Wisdom Podcast. I'm Melissa Joy, a certified financial planner and the founder of Pearl Planning. My goal is to help you streamline and organize your finances, navigate big money decisions with confidence, and be strategic in order to grow your wealth. As a woman, you work hard for your money, and I'm here to help you make the most of it. Now, let's get into the show. I got the chance to meet our guest today because I have been a guest on his podcast. Today, we will be joined by Tony Steuer. Tony is a personal finance evangelist. He really believes that he can help to increase your financial fluency and that is something that we also need, which is also one of the missions of this podcast. And in his role as a very experienced career in personal finance, he has evolved to create the Get Ready Money podcast, and he also has a Get Ready toolkit. So we're going to learn all about why he has this mission and a little bit about his life's work before he started the Get Ready Money podcast as well. Tony, welcome to the podcast.
Hi, Melissa. Glad to be here today.
Well, I was thrilled to join you on your podcast. And I also know if you, for those of you out there listening, when you finish up this episode, if you'd like to kind of stay on top of personal finance topics, Tony has a really great kind of weekly shout out of news and notes when it comes to personal finance and really shouts out great content. But tell me a little bit about how you started in this financial and money world, the work that you've done, and then we're going to talk a little bit about what you're doing today.
Fantastic. Well, it started out years ago. I was an insurance agent, and I quickly discovered that I didn't really like selling insurance, but that also there were a lot of complicated insurance policies out there. So I became, in California, it's called a life and disability insurance analyst, which allowed me to charge a fee for doing insurance consulting work. And I spent the bulk of the next 30 years working mostly with financial planners, but some litigation attorneys, trust officers, and related in reviewing existing insurance policies. And that got me really interested both in, best practices. It got me interested in the educational aspect because I couldn't figure out why smart people would buy these insurance policies that didn't benefit them. So that led me to the whole education thing. It got me interested in the psychology because it wasn't a question of clients not understanding, not having the intelligence, not having the educational background. There was something else going on behind the scenes, which got me really thinking about behavioral science and behavioral finance long before other people were talking about it. Not really on purpose and not naming it, but going, okay, what are people thinking and why are they thinking it? And that led me to start the podcast and doing the work that I do today.
I am so interested in this because insurance is something that is basically another word for risk management. And in the world of financial planning, this is a core component of the education that we receive to become certified financial planners, as well as it's just an important component of having a sound game plan when it comes to your money. But it is also primarily sold to people in, kind of a commission-based world. And there is can be a lot of complexity when it comes to insurance and kind of varying scales of how people are regulated in terms of how they communicate about insurance. So it's very rare to have someone like you, Tony, who is an analyst who could be paid to consult, because in so many cases, it's the sales force that's doing the talking. And, that could include someone like me. So why did behavioral finance kind of make you tick as you were learning about how consumers, kind of purchased or owned insurance policies?
Well, because I started to think about, okay, there's all these insurance policies that people are buying that they don't need. And so the question is like, why were they buying them? Well, one of the things is, so I would be called in by financial planners, and usually a financial planner would say, yeah, I have this client, they have 5 insurance policies. Tell me if they're any good. Tell me what we should do, what changes we should make. So I spent a lot of my career actually undoing insurance policies and figuring out how to best do that with the least harm to the
Problem
client.
solving with existing policies that may need to be either modified, some given up, some kept, kind of solved for basically. Is that right?
Exactly, because the majority of people have no need for cash value life insurance. They have no need for permanent life insurance. And and that's basically the challenge is that we got away as an insurance industry from the purpose of protecting against the risk of somebody passing away and the need that somebody has to protect against this risk into creating these crazy products that are sold as an asset class and that can,
Oh, it's your
you know,
retirement
the
plan. You
Swiss
shouldn't trust a
Army. Yeah,
401k. You need to buy a big high ticket insurance policy instead because you can borrow from it for free and et cetera, right?
Exactly. So, I started thinking about like, okay, well, is this a financial literacy issue? Is it because people don't understand their money? Well, yeah, that's part of it, but there was something deeper going on because when we'd come up with an analysis and I'd do it in conjunction with a financial planner, I didn't really meet that often directly with a client. I was usually working with a financial planner on the back end. It's like, okay, well, why is the client not getting rid of this insurance policy? Why are they so emotionally vested in it? In many of these cases, the clients could self-insure, or they were at a point where their kids had moved out, so they didn't need to provide protection for their kids. They had enough assets in their retirement plan, all the usual things where you would buy an insurance policy from. And so you get into these conversations, and it's like, well, or they'd be looking at an insurance policy and it'd be like, well, it's got a 15-year surrender charge. Is that really something you want to get into? Or, you could do something much different with your money, like invest it. You could buy a disability insurance policy. There were so many other things that could do a long-term care insurance policy. So that was really it is like, okay, what's going on psychologically? Why do people not want to do that? But then the other question is, why do they buy these policies in the first place? And I think that's one of the questions a lot of us ask in the financial services field anyway, is like, why are people buying these products? Not just life insurance, but all of these products that make no sense. And part of it, a little bit of it is greed. A little bit of it is thinking that they know something that somebody else doesn't. When you watch some of these videos on YouTube, they're about these schemes called Be Your Own Banker, the missing money concept. There's lots of different names, the infinite banking system, but they're all on the premise that you can do these things with life insurance policies that nobody else knows about, that you're unlocking the secrets of the universe. And that's always the bad sign when it comes to anything in life is when somebody goes, you're the only one who knows this. You're going to get a secret. Well, here's the thing. Life insurance companies are not stupid. They're some of the oldest companies. The insurance is one of the oldest
In
industry.
existence,
Yeah,
hundreds of years old. Yeah.
exactly. They have a lot of experience. They know how to price their products. They're profitable. When you look at companies that are profitable, insurance companies are rocks. When you look at Warren Buffett, his core holdings are insurance companies. Everybody talks about all the other investments he makes, but the core of Berkshire Hathaway is insurance companies. So when you go back to these products and you start hearing things like, well, you can put all this money in and you're going to get these tax advantages, or you can borrow money out because you're your own bank and you're borrowing money from yourself. Well, that's not true. You're borrowing money from an insurance company. And when you borrow money from the insurance company, they're going to charge you interest on that loan. Now, normally, when you borrow money from yourself, you're not going to charge yourself interest. But people tend to think that that's the way it is. And they tend to believe these videos instead of doing research.
Hmm. So a couple concepts that you described as you were discussing this. One of them is self-insure. So that would mean, maybe you had life insurance, assuming if I pass away before my career is over, my spouse would need money to my portion of retirement. Kids would need to go to college. We have a mortgage. We might need to pay off the house. And some of those needs tend to fall away for some people, or many, if not most people that work with personal financial advisors as you get closer to retirement. And so your insurance needs may change over your life. But some of these permanent policies, there's no person asking, at ticks along the road if you're still insured for the right amount of money. Is that right?
That's exactly it. And as you point out, is needs are usually finite. Is you may be insuring a 30-year mortgage. You may be insuring your kids till they get out of the house, which hopefully now may be a lot longer than it used to
Yeah.
be. Your kids may be sticking around a little bit longer, but
I'm saying some prayers for that one. We'll see. Yeah. I've got a high schooler and a middle schooler. So,
yeah, so but that's just the way it is. But at some point, even if your kids are still at home, they're going to be earning an income. But let's say you buy $1 million life insurance policy to protect your spouse, in case something happens to you. Well, if you're putting money aside in your 401k and you have $1 million, well, then do you need that $1 million for your spouse? You may not. Your mortgage may only be a quarter of what it was before. And that's the thing, is that when people are thinking about these things, is they're not matching the duration of their need for the duration of the insurance policy that they're buying. And that's the big thing, is we have to flip that conversation on its head and start thinking about, like, okay, well, what's your goal? Is with so many financial services and products, but especially life insurance, and you said it at the very beginning, is it's sold rather than people go, oh, I have this need and I need to find the right product to take care of that need.
it's so interesting. And I agree with you. Another thing that you mentioned is a surrender charge. And this is associated often with these insurance policies that have an investment component. That's cash value, is the value of the policy that you could cash out or take with you or apply to a different insurance premium. Annuities also often have surrender charges. And often those are associated, an insurance company doesn't want to assume managing a risk and then turn around and undo all the work they do. But also, surrender charges tend to rhyme with commissions paid to the people that originally placed the policies. And that's how an insurance agent is compensated. Is that right?
Yeah, there is a correlation between surrender charges and commissions. It's a little bit complex, but yeah, for the majority, is it does translate. That's one of the reasons the insurance companies have a surrender charge. The other reason is because it takes the insurance company a while to break even on writing an insurance policy, which is, definitely partially because of the high commissions, but it's expensive for the insurance company to underwrite the risk. It's expensive for them to issue the policy. So they have a lot of costs going in. However, the insurance companies on a lot of these policies have surrender charges for up to 16 years, which is a lot longer than they have those high costs. So the insurance companies have this all calculated. But one of the reasons why they have the long surrender charges is that so many people lapse their permanent life insurance policies in the first 5 to 10 years. At least 5% of policies of whole life, let's take whole life insurance policies, lapse in year one. So already the insurance companies are out. 5% of the policies they write are going to lapse, because most people by the second or third year go, holy cow, I'm paying this much for my life insurance. What am I doing? And so a majority of the whole life policies are terminated by year 5, but yet the insurance companies are on the hook. And what tends to happen, and this happens with health insurance, is that the people who are less healthy and less, that are more risky to the insurance company, and by risky, I mean, are more likely to have a claim, are the ones who tend to stay on, so that it becomes more expensive to the insurance companies to have those people on. And that's what the insurance companies are looking at, is like, how likely are they going to have to pay a claim? And the one thing that we can all agree on is that insurance companies don't like paying claims. They are in the business of paying claims, but they don't want to pay a claim if they don't have to. And when we look at this, it is good for insurance companies to make a profit. They need to make a profit to stay in business. So it gets pretty complicated. But the bottom line is surrender charges are for a very long period of time. And in the first couple of years, they are 100% or like 98%. So they're very high for the first few years. And if I can touch on annuities for a second, is that okay?
Sure. Mhm.
Annuities are even worse. Is they have these annuities called multi-year guaranteed annuities that people should really be aware of. Is what they do is they provide you a guaranteed interest rate for a certain period of years. That's fantastic. They're great interest rates. They guarantee it for 5 years. You're like, this is great. And then it renews at the end of that period with another guaranteed interest rate. What they don't tell you is that the only opportunity for you to take out all your money from that annuity is during a 30-day window when that period renews. So surrender charges are something that people really need to think about and be aware, like, I can't get my money out of these contracts even if I wanted to. And that's very important.
Yes, and so the whole episode is not about insurance and annuities, but what I want people to know and understand, because we have this expert here, you, Tony, is if you're in a sales process, let's say, at the point of sale of, hey, you really need to buy this insurance or this annuity, and doesn't maybe it doesn't feel fully aligned, or you're like, hey, this is sounds complicated. Why are all these forms here? It's okay to ask for a second opinion. It's also, something that it's okay to ask how an agent is being compensated, asking about the commission, because that is not something that would typically be easy to identify in any of the paperwork or disclosures. And then understanding a surrender, understanding what if I change my mind, what is the purpose, what are we insuring, and then also avoiding those, kind of seems too good to be true, kind of, um, you know, like you're saying, be your own banker type situations, because insurance is really typically for risk management, not investment returns in most, if not all cases. And there still are some circumstances, at least in my opinion, and I guess I would ask you open ended. What are some good uses of insurance? When do you see more complicated policies making sense as you are analyzing different circumstances and situations?
Well, for the majority of people, term life insurance is all they need. When you need permanent life insurance is when you have a permanent need, you use it in an estate planning situation where there's a need for liquidity for the estate. I've worked on some estates for real estate developers where if they pass away, the only way to pay the estate taxes would be to liquidate real estate. And if it's a bad market for real estate, that would be a huge hit. So in that type of situation, is you would need a permanent life insurance policy to always be in force for whenever it was needed. Another case is for special need children. So if somebody has a special need child who will always be financially dependent upon them, you can set up a special needs trust and put a life insurance policy into that to take care of that child's needs. Other situations where I've seen permanent life insurance use is in certain business planning situations. Is sometimes it can be used as a way to hold on to a key employee, sort of to provide a golden handcuffs, where the employee gets some of the cash value later on if they stay so many years with the company. So you do get into some situations where a cash value policy makes sense. But as you've seen from these three examples, they're all percent, most people don't need those, and most people are never going to encounter those types of situations. And when you do have one of those situations, you're probably going to have an advisor who's working with you, who's going to walk you through what you need and why you need it.
Yeah, and I would mention in our own practice, not everyone walks out with an insurance policy, but we do some hybrid long-term care, which is in a life insurance chassis, but is really solving for perhaps an unfunded need for nursing home. And it's all based on going back to what you're really working on nowadays, which is your approach, your behavioral approach to how you perceive risk. So it's not just a, you know, black and white scenario. It really depends on the client's perspective on what they want to insure, but that can be a fit in some cases. And I'm happy to debate it as well. But is one kind of non-term life insurance that some clients of ours use.
Actually, and that's a great example, and that's a great use of a cash value policy that you don't wanna get rid of, is to use a Section 1035 tax-free exchange to a combination hybrid life long-term care insurance policy for exactly that reason, is there is a long-term care insurance need for pretty much everybody. Everybody has some long-term care exposure, and then you get a little bit of life insurance with it. So that's a great product.
Yeah, and if you're sitting with one of those complex products, then there are people out there. For example, our company works with insurance analysts, just like the role that you have filled over your career, Tony, to assess the circumstances. And the right answer isn't always to dump the product. It's first of all to be informed about the circumstances of what you're what's covered and how that fits with your life, and then assess. It might be the 1035 exchange that you mentioned, Tony, or it might be a reduction in a policy that's already kind of paid up if you make adjustments. But you know, kind of sometimes insurance gets dropped, the discussion gets dropped after you sign on the dotted line and just send in your premium checks. And there can be more consulting and analysis to make sure that whatever you have integrates with what your needs are at this point in your life. So just know that you can ask for that if you find yourself saying, "Oh, I just like locked that in the closet and hate writing the premium check, but I feel stuck." Having a conversation with a professional can be helpful.
Definitely.
So let's pivot
All
though.
right.
I want to hear how this work, which is, you know, I think like very powerful, very complex, kind of messy. And just like my work, you're getting into the, you know, kind of people, how they work, what they need, what fits their psychology. How did that create your podcast and your really amazing free personal literacy tools?
Well, thanks. So what it did was this gets to something you mentioned earlier, that the challenge is people don't know the right questions to ask. So it took me a little while with my podcast to really find my footing. I don't know if you went through that, but
Oh, yeah, still going through it.
so, I figured the best thing I could do was to help people be empowered, with that saying, if you give a man a fish, you feed him for a day. If you teach a man to fish, you feed him for life. So I got to the conclusion that I had to help people figure out what questions to ask. But because that's the thing, is when we're going to look at a financial service or product, there's some financial literacy courses now in school, but they really don't, for the most part, teach people everything they need to know. And the majority of us never had any personal finance courses in school. So we can't expect consumers or our clients to know what questions to ask or what we're even talking about. For any advisor listening to us, I'm sure you've all had that experience where you're talking to a client about something that you think is the most basic concept, and your client just has that glazed look like they have no idea what you're
Yeah.
talking about. And that's it is, and then the client has no idea what you're talking about. And then they feel ashamed to ask the obvious question, like, can you explain to me how an insurance premium works? And again, I'm defaulting to insurance a little bit, but it works with the same thing. A client, you'll talk to a client like, yeah, you need to get some stocks and bonds, and, we'll allocate this here, we'll allocate there. And the client's all like, what is a stock? What does that mean? What's the difference between a stock and a bond? And, we've already leapt further on in the conversation where the client's still like, okay, what is investing? How does that work? how am I going to participate? How is the stock any good for me? And so that's it, is that it's really, we have to help one, clients feel comfortable saying, I don't know. And if we think back to school and we're all in that classroom and we're all there and a teacher's talking about something and we have no idea, but we don't want to raise our hand and say, I have no idea what you're talking about. That's how clients often feel, is they have no idea, but they don't want to stop you and say, I don't really know what you're talking about. So with my podcast and my work is I want to help people, one, feel confident that they can say, I don't know, but two,
Which you should work with someone who it still may be intimidating to ask that question. And in fact, early in um, working with clients, I try to remind them or tell them, like, whoever you hire, I would love to work with you, but if you hire me, I want you to be comfortable to say you don't know on things that you think I think you should know, because really that that is our job, and we've all been there, and it's so important to have a trusting relationship where you can say, "You said a lot of things that sounded smart, but I have no idea what you mean. We need to, like, either redo it, say it a different way, like, we can't go on until I get these basics right."
exactly. And so it's helping people understand what questions to ask, but also that's a sign when you're working with somebody, if they're not asking you any questions, then you know they're not really following. And what I always tried to do was to get people to repeat back to me what their understanding
Mm.
was of something. What did you hear? What do you think I said? You don't say it exactly like that, but you want them to restate in their own words how they're comprehending something that you presented to them. And that's the important thing, is to help them find the words to use to encourage the communication, to encourage the curiosity. And I think that's the biggest thing, is that what we can do as members of the financial services community is encourage people to be curious about the different areas of their money, to gain confidence to say, these are my goals and I want to meet my goals. I don't want to be talked to about products that just because they're great products that you recommend. I want to know, is this product going to help me solve this problem?
I agree with you. I love that you said different areas of personal finance, because I think there are certain, like, if you go to the gym and you only exercise on your arms, I think there are certain areas where the kind of self-implementing community does really fantastic. There's definitely software and fintech you can use to budget, and investing has been really a broad and expansive, kind of and growing community of, here's how things work, here's how you do it. And so if you decided to roll up your sleeves and really integrate understanding of those areas, there's a lot of confidence there. Areas where I see more gaps are, how does retirement actually work? What are the different tax implications of withdrawing from one account or another when it comes to retirement? What you can figure out, I think I have enough money, but, like, what happens if something goes wrong? How do I insure things? Or estate planning is something that is often neglected. And there's a lot of less sophisticated kind of tax approaches. And so I think, at this stage in the kind of evolution of personal finance, the investment work might be more commoditized, well, certainly is, than it was 15 or 20 years ago. The There are areas that are darker, that are, like, just don't get as much sunlight, and it's not as easy to kind of integrate into kind of self um directed decision making. And then when you add variables of, like, hey, get your cash flow right, get your investments right, then add in your retirement game plan and this and that, it becomes more complex because you need to integrate and prioritize over a variety of things. And so I think that having podcasts like you have and like we have that talk about all of these topics and don't just kind of stop at investing basics, or the power of compounding, are really necessary and valuable nowadays, especially at this moment in time.
Yeah, without a doubt. A couple other things I'm concentrating on my podcast, talking a lot about is scams and best practices. As I mentioned, I've done some litigation consulting. I served on a California Department of Insurance curriculum board for almost a decade. And so there are definitely bad actors out there. And I think one of the ways people can protect themselves is to learn red flags and to help their family and loved ones or clients learn to spot red flags because these things exist. And so, you play offense with some of these things, like investing and other things, and then you're playing defense with your insurance and scam awareness, identity protection, and all these other things. And I think the other thing that we're going to see a huge shift with, I have taken the Impact Philanthropic Advisor course, is that with the
Oh,
great wealth transfer to women, women are much more charitably inclined than men, and women are going to be controlling the majority of money over the next 10 to 20 years. Is that that's an important thing for your financial planner to be able to help you with, I think, is helping you figure out how to support the organizations that you want to support in line with your values.
that is so true. And aligning your values can really increase your comfort with money or wealth. And just since you mentioned it, and this is, kind of a general personal finance episode, I can't finish the conversation without hearing a few of your top red flags when it comes to frauds and bad actors. What do you tell people to listen for? And I find so much with our listeners because we're kind of all in the messy money middle of life, that you're not only thinking to protect yourself, you're thinking to protect your parents' generation as well as the kids who can might fall for something. So what are you listening for? What are you telling people to watch out for?
Well, first thing is, as silly as it sounds, listen to your gut. If something sounds too good to be true, then it probably is. As I mentioned earlier, one of the things like with the being your own banker is when they tell you that you're the only person who knows something, that this is a secret. A lot of scammers will do that. They'll say, "Hey, Melissa, I've got this great deal, but you're the only person who knows about this. So don't tell anybody." And that's part of it. That leads to the next thing where they isolate you. They say, "Melissa, don't talk to your husband about this. Don't talk to your kids about this." Sorry if I made an assumption that you have a husband, but don't,
No, it's okay. You
don't talk to your partner about this. Don't talk to your neighbor about this. This is something that's for you. So they start to isolate you. So when somebody's saying, don't talk to somebody else about this, that's a huge red flag. The other thing is they'll start to time pressure you. They'll say, you have to do this by tomorrow. If you don't do it by tomorrow, you're going to lose this opportunity. So those are some of the big red flags is when they start to pressure you, tell you you're the only one, and it starts to sound too good to be true, is there is no magic out there. If there were, other people know, especially in today's world, somebody would be talking about it on Instagram or YouTube if it were really that easy and it really worked that well.
Well, thank you for pointing those out. I couldn't agree more. And there are so many different, you know, there are so many actors out there, especially with the kind of the digitization of the way we communicate, and the way information is disseminated, that are, kind of trying to on scale, fish for their, for lack of a better word, their next victim. So it is so important to be vigilant and to trust that inner gut that says, I may need to pause or ask for something. If you're ever pressured, there's just very rare moments in, kind of dealing with money where you need any sort of pressure. You should always have space and time to make decisions. Tony, can you tell us where we can find more about the work that you're doing and your tools and resources?
Yeah, you can go to my website at tonysteuer.com, and you can also find me on LinkedIn, and my podcast is available on all major podcast platforms. It's now, I retitled it to Get Ready Before Life Happens.
Perfect. That's a great title. And so glad to have you on, and keep doing the great work in increasing people's financial fluency.
Thanks, Melissa. Thanks for having me on today.
Thank you for listening to the Women's Money Wisdom podcast. If you found value in this episode, the best way that you can support the podcast is to forward an episode to a friend or leave a review. Go to proplan.com and the podcast link to get all the resources and links mentioned. This presentation by Pearl Planning is intended for general information purposes only. No portion of this presentation serves as the receipt of or a substitute for personal investment advice from Pearl Planning or any other investment professional of your choosing. Copies of Pearl Planning's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or on our website platform at pearlplan.com. The information that we share is meant to educate and inspire, not serve as personalized financial advice. Everyone's situation is unique, so be sure to consult with your own financial professional for guidance that fits your life. And just so you know, the opinions shared in this podcast are Melissa's own and those of her guests. They don't necessarily represent any organizations with which Melissa is affiliated. For more important disclosures, please go to our webpage at pearlplan.com.